Welcome back everyone, and in this video, we're going to go over the top 4 high growth companies that Ark Invest has been buying into over the past few days. So we all know Cathie Wood and her team at Ark Invest buy companies who plan to change the world. They focus their ETFs on disruptive innovation, and over the past few days, they have been heavily buying into 4 major Chinese tech firms. If you're unaware of what's going on within China right now, the Chinese government has actually launched an antitrust investigation into the major e-commerce platform, Alibaba. And this has sent a ton of fear in the market. American investors have been selling off, and we have seen the share price drop more than 10% in one single day. So the Chinese tech firms have seen a lot of red over the past few weeks, and a lot of investors are scared to buy into these types of companies moving forward. But Ark Invest doesn't seem scared whatsoever, and they don't really seem too worried about the outcome of this investigation. So essentially what the Chinese government is planning to do is investigate Alibaba to determine if they are acting as a monopoly within the Chinese ecosystem. And they don't want that to happen. Governments do not like monopolies, although that may be good for investors. For actually competitors within the country, it's not a good thing to have. So this investigation is going to take place, and this has sent a ton of fear in the market, and we have actually seen Alibaba shares seen a massive decline of over 20% over the past month. But Ark Invest, like I mentioned, does not seem scared of this news, and they are actually buying the dip on major Chinese tech firms like Alibaba. If we take a look, before this investigation took place, they held around 340,000 shares, but since this news got released, you can see a massive uptick in shares held by Ark Invest, and now they own more than 513,000 shares of Alibaba. And you can see as the yellow line, the price chart went down, Alibaba's shares held went up, and they continued to buy the dip on this major tech firm. And although Alibaba is the company actually under investigation, a lot of other major tech firms within China saw a decrease in share price as well. And Ark Invest has been buying those brands as well. If we take a look at Tencent Holdings, you can see over the past 2 days alone, they increased their shares held from 2 million all the way up to around 2.6 million shares. Ark Invest bought 600,000 shares of this company over the past 2 trading days. So you can see they are loading up on these Chinese-based tech firms and still have a very strong bullish outlook for these companies down the road. So what we're going to do in today's video is do a quick little analysis on each of the 4 companies that Ark Invest has been buying, take a look at their current financial position, and some future expected growth rates as well. One thing I do want to make very clear is that there's still a lot of associated risk with all of these companies because we do not know the outcome of this antitrust lawsuit. So China has just launched this investigation. We don't know what the outcome is going to be, and there's a lot of people giving their expectations for the end result. Some people believe it's going to be very minimal, just a couple of fines and maybe some slight changes to Alibaba's operations. Others believe it can be more severe, and the Chinese government may force Alibaba to dismantle itself and actually separate all their different operations into various companies. So we really don't know how severe and what's going to happen, and that's why there is a lot of associated risk at this market environment and why we have seen such a pullback in investors taking their money out of these large Chinese firms. But clearly Ark Invest, from their buying opportunities, they have not been selling out, they've been only buying more, really just shows that they are actually bullish and do believe that this won't be as bad as expected, and they like this buying opportunity at these reduced share prices. So that's what the plan is for this video. I want to make the risk very clear. So do your own research when investigating these companies, and if you want to buy the dip like Ark Invest has been doing. Also, if you're new to the channel, please hit that like button and subscribe. I am the Gen Z investor. We post about the stock market every single day, so I really would appreciate if you please hit that like button and subscribe for daily videos. And now we're going to move on into the first company that we're going to examine in today's video, which of course is Alibaba, the main brand that is under that antitrust investigation by the Chinese government right now. The company trades at only $236 per share and has grown a slight 3% over the past year. You can see they actually peaked at around $317 per share, but have seen a major pullback to where they sit today. And over the past month, shares are down over 20%, and you can see the huge decline they saw on the day of this antitrust investigation announcement. The company is still extremely large with a market cap at just over 600 billion and trade with a forward PE at around 21.5. If we take a closer look at the share price from their most recent high at 317, you can see the company is down more than 25%, a huge decline for this tech company. And you can see they actually saw a single day decline of over 13% when we got news of this announcement. But like we saw in the chart, this has only made Ark Invest want to buy more. And from this point, they've been loading up on shares and now own a record high position in Alibaba with over 513,000 shares of this company. And we just got news that Alibaba is doing a $10 billion share repurchase over the next 2 years. And essentially, they want to try to lower the share price decline. The share price has taken a massive hit. They want to get in at a lower price, and they really want to stop the bleeding. They want to do everything they can to try to keep their share price stabilized and get it climbing back up. So they just announced a $10 billion share repurchase program that will take place over the next 2 years into 2022. So I think this is a great idea from the company just to try to give some investors some confidence that the brand is still very strong and that they plan to repurchase shares over the next 2 years and increase that amount to $10 billion. Now, if we take a look at their income statement, if you're really unaware of how big and how fast Alibaba has been growing, it's actually been very impressive. Back at the year end of 2016, they had around $15.6 billion of total revenue. But you can see year over year, massive increases, and in a 5-year span, they now have their total 12-month trailing revenue at over $86 billion. Their exponential growth in their top line has been absolutely remarkable, and it's even crazy to imagine how fast this company has continued to grow and expand year over year. And they are highly profitable as well. Over $19.4 billion of net income over the past year. They have a profit margin over 20%, and you can see huge amounts of net income coming into this business, giving them a ton of capital to reinvest and grow. And although we've seen this huge decline as of late, analysts are still bullish on the company. The 12-month price target represents a 53% year over year increase from 47 analysts. And if we take a look at the buy rating, it's considered a buy, 19 strong buys, 29 buys, and 1 single hold from 49 analysts. If that does not scream that analysts are really liking Alibaba at this level, I don't know what else to say. The analysts, 49 were surveyed. Most stocks only have between 10 and 20 analysts following them. You can see Alibaba, a very large position, 49 different analysts with a buy rating. Over the past 6 quarters, they have absolutely crushed analyst expectations, beating each and every time by averaging over 20+% earning per share surprises over the past few quarters. And into 2021, we're expecting 37% annual revenue growth, followed by 80% total revenue growth over 2022. So analysts are just extremely bullish on this brand and are expecting the top line to continue to explode at a very fast rate for many years down the road. Taking a look next year, the company is expected to grow by over 20%. Yahoo Finance has them as strong buy as well, and the average 1-year price target for this firm sits at $337. From where they sit today at $234, huge upside to get to this price target over the next year. So of course, the first company we had to discuss is Alibaba. Over the past 5 years, the company is up 170%. The last few months have been very hard for the company, but you can just see by their income statement, they have been growing at a very fast rate, expanding their business. They're getting to so many diversified streams of revenue, and that's really what led to this antitrust investigation. The Chinese government is worried that this company has gotten too large, too diversified, and dominating too many markets that they want to investigate for themselves, and we will have to wait and see what's going to happen. And Ark Invest, though, likes the price. They like the dips. They have been buying in, and this is a company we have to be following along with over the next few months. Now we're going to move on to Tencent Holdings. This is the second company that Ark has been heavily buying into over the past dip. In the 1-month chart, you can see an 8% decline in share price with a major pullback over the past week. A very large company with a market cap of over $637 billion with a nice pullback away from the 52-week high. If we take a look at Ark Invest position, you can see they were averaging in week over week. Every single day, every single week, they were slightly buying in more shares, but as of late, once we saw the yellow line that represents the price go on a massive decline, they heavily bought in. You can see over the past 2 weeks, they have seen a massive increase in position and are now holding more than 2.6 million shares of Tencent. In a past week, they went from 2 million share position up to over 2.6 million, so an increase of 600,000 shares over the past few trading days. So they've been heavily buying into this company that has actually been growing and expanding at a massive rate. If we take a look now at their income statement, you can see that top line revenue, similar to Alibaba, growing exponentially at an insane rate year over year. Over 15.8 billion 5 years ago, now growing that to over 66 billion in the past year. And taking a look, another company with extremely high profit margins. Net income coming in around 25% of top line revenue, and they have around $18 billion of net income over the past 12 months, another number that has been growing exponentially year over year. And if we take a look at this business, next year they're expected to grow by over 31%, and the 12-month price target sits at over $78 per share. Companies rated as a strong buy, another company, very large expected growth rates for many years down the road. So Tencent is the second company they have heavily been buying into, another Chinese firm that has been expanding and growing at a massive rate. And over the past 5 years, this company is up more than 257%, which is absolutely incredible. Now we're going to move on into the next company that I've discussed many times on this channel, which is JD.com. This is another e-commerce platform within China that has absolutely exploded over the past few years, similar to Alibaba and Tencent. Ticker JD currently trades around $84 per share, and the company has grown 127% over the past year. They have a market cap at around $126 billion and trade at a forward PE at around 50. If we take a look at the 6-month price target, the company hasn't seen such a severe decline like we saw in Alibaba, but they are still down 9% from their most recent 52-week high. So a 9% decline is still a nice opportunity to get into a major tech giant. You can see that JD.com has been consistently bought into from Ark Invest day over day. Every single day you can see the company was increasing their position by a few thousand shares. But in the yellow chart, as we saw as of late, we saw this huge little decline. That's when they started to pick up their buying of JD. So every single day they purchased a couple thousand shares, maybe 5,000 here, 10,000 here. But in one single day, they increased their purchase and bought in more than 100 shares of JD.com, increasing their position to over 1.6 million shares held over this latest dip. And analysts are very bullish on this company as well. We're expecting 17% share price growth over the next year. And if we take a look, the company is rated as a buy as well. 15 strong buys, 23 buys, and 3 holds. Similar to Alibaba, very bullish perspective from these 41 analysts. And if we take a look over the past 6 quarters, they have absolutely crushed analyst expectations each and every time. And their lowest positive earnings per share surprise over the past 6 quarters was a 21% beat, which is absolutely incredible to even imagine. And annual revenue only projected to grow at insane rates, averaging a 28% forecasted growth in 2020 and 57% top line expected growth in 2021. So massive, insane expectations for this company down the road. And they're expected to grow by more than 41.5% next year, with a strong buy rating from Yahoo Finance, and the average price target sits at $99 per share. Huge, huge upside from where they sit today at that $83 level. So JD.com, another brand similar to all the companies we've already taken a look at, top line exploding year over year, and they've actually brought in more than $100 billion of total revenue over the past year. They have higher revenue numbers than Alibaba and greater than Tencent as well, and that number only exponentially grows annually year over year. And if we take a look at their bottom line, their net income is lower than the other companies, but they are trending in the right direction. They have much lower profit margins, which is why the company, I'm going to assume, isn't as valued as highly as the other 2 brands, but you can see they are profitable. $4.2 billion of net income over the past 12 months, and you can see they've done exactly what most growth companies do. They reduced their net losses year over year, finally being profitable, and now are growing that net income nicely annually over and over again. So JD.com is another e-commerce platform that has exploded in 2020. I'm a big fan of this brand long term, although there are still a lot of risks associated with regarding this antitrust lawsuit and all of the risks of Chinese stocks getting delisted. I think JD.com is still a solid brand. If all this goes away with very minimal impact on Alibaba, I think their share price will explode even higher. And this company brings in a ton of revenue. Their net income is finally growing, and I think overall a very nice long-term hold in the e-commerce space that is actually represented without North American influence. So very interesting company. And now we're going to jump right in to the final stock that Ark Invest has been buying into, which is ticker BEKE, KE Holdings. So this is one of the largest real estate companies within China, and they just recently hit the public market. I made a full video going over this company a few weeks ago, so definitely take a look at that if you want to learn a lot more about this company in a more in-depth perspective. They have a market cap at $73 billion and trade at a forward PE at over 87. And similar to JD.com, Ark was actually building up their position in this day over day, but you can see the day we saw a massive decrease in share price, they increased their buys from around 5.3 million shares all the way up to 5.9 million over a 2-day span. So you can see the company bought around 600,000 shares, which is a huge increase to their current position. Now, if we take a look at some future growth expectations, the company is expected to grow by more than 20% next year. And taking a look at their income statement, like all the other brands we've already taken a look at, total revenue has been growing at a nice rate year over year. One thing that is different though is this company still does lose money. They've lost a net loss of 211 million over the past year. So a younger company, not as well established like the first that we've already taken a look at, new to the public market, are still posting net losses, not highly profitable just yet, but still has a ton of potential over the long term. So those were the 4 companies that Cathie Wood and her team at Ark Invest have been buying into. Overall, we all know this lawsuit has really sent people scared of the Chinese market. A ton of investors are pulling away from these positions, but clearly Ark Invest is not too worried about this lawsuit. Maybe they believe that it'll just be a slight fine and maybe some adjustment to Alibaba's operation, but nothing too severe. I believe if large hedge funds like Ark Invest were really worried about this lawsuit and were actually paranoid that this may disrupt all of the large Chinese firms, I don't think they would be heavily buying in, spending tens, hundreds of $1 million investing into these companies. So it's an interesting position right now for sure into all of these Chinese firms. For me personally, I don't own any of these companies. I actually don't plan to over the short term. Maybe if we get some news that the antitrust lawsuit actually went well for Alibaba and it's not as bad as people were expecting, then maybe I might buy in. But I think there's a lot of American brands that are doing similar things to these Chinese companies that can provide sustainable reward over the long term as well, with a lot less of the risk. So for me personally, I'm not into any of these companies at this point. I won't be buying into, but because Ark Invest has been buying in, Cathie Wood sees some type of outlook down the road, we had to discuss them in today's video. So those were the 4 different high growth companies Ark Invest has been buying into. We saw for all of these positions, they're a little bit of a spike over the past few days. So please hit that like button and subscribe. I'm the Gen Z Investor and see you in tomorrow's video.